Ladies and gentlemen, good day and welcome to Matrimony Q1FY27 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on a touch-tone phone. Please note that this conference is being recorded. I would now hand the conference over to Mr. Jairam Shetty from ICICI Securities. Thank you, and over to you, sir.
Good evening, everyone. On behalf of ICICI Securities, I would like to welcome you all to Q1FY27 earnings call of Matrimony. From the company, we have Mr. Murgavel Kiraman, MD and CEO. The call will begin with the brief management remarks, followed by a Q&A session. I would like to hand over the call to Mr. Janaki Raman, sir, for his opening remarks. Over to you, sir.
Thank you, Mr. Jairam Shetty. Good evening, everyone. During our last interaction, we indicated that profit for the quarter would be more than double of the last year. I am pleased to report that we have delivered on the guidance, with PAT increasing by 127% year on year. In Q1, on a consolidated basis, we achieved a billing of rupees 136.0 crores, a growth of 7.8% quarter over quarter and a 7.8% year on year. Revenue is at 130.5 crores, a growth of 11.7% quarter over quarter and 13.2% year on year. Key highlights for the matchmaking business in quarter one are as follows. Billing at rupees 135.3 crores, a growth of 7.9% quarter over quarter and 8.0% year on year. Revenue at rupees 109.5 crores, a growth of 11.7% quarter over quarter and 13.6% year on year. Matchmaking EBITDA reached rupees 34.9 crores, which is 26.9%. Actually, there's a difference between the billing and GAAP revenue of around the 5+ crores. If the billing be the same as the revenue, the EBITDA would touch even 40 crores. So I think matchmaking reached a certain level of threshold in terms of EBITDA margins. So anyway, the increase in billing will benefit in the subsequent quarters. We added 2.72 lakhs paid subscription during the quarter, a growth of 15.9% quarter over quarter and 3.7% year on year. ATV for the matchmaking business dropped at 6.7% on a quarter on quarter and grew by 4.2% year on year. We facilitated over 25,500 success stories during the quarter. Now coming to the other business, our marriage services business and other businesses, billing were rupees 74 lakhs, a growth of 0.5% quarter over quarter and decline of 13.8% year on year. Revenue was rupees 96 lakhs, a growth of 13.1% quarter over quarter, decline of 24.3% year on year. EBITDA level losses for quarter was 3.8 crore as compared to loss of 5.7 crore in the last quarter. However, we expect the new other initiative, wedding services, the growth momentum will pick up this quarter and the scale up in the coming quarters. So definitely see the growth momentum happening there as well. On the billing and the revenue outlook for quarter two, matchmaking billing and revenue will have a double-digit growth year-on-year basis in quarter two, and the profit also be triple-digit in quarter two as well. And marriage service billing is expected to be higher than quarter one. And we're also doing a lot with the AI. So we are using AI in many areas, using AI in automation, service improvement, product improvements, and driving efficiency. So there's a lot of work happening on the AI side as well, so which is helping us to drive efficiency and also improving the experience which we are providing to the customers. So let me hand over to Sushant Swine, our VP Finance, to comment on the key profit highlight for the quarter and the next coming quarter as well. Yeah. Sushant, over to you. Yeah.
Thanks, Muruga. Our EBITDA margin for the matchmaking business in Q1 is at 26.9% as compared to 22% in Q4 and 17.6% a year ago. Marketing expenses for the matchmaking business in Q1 were 46.5 crores compared to 43.5 crores in Q4 and 46.7 crores a year ago. Excluding marketing expenses, margins for matchmaking business is at 63% and compared to in Q4 59% and a year earlier. On a consolidated basis, EBITDA margin in Q1 is at 20.1% compared to 12.4% in Q4 and 11% a year ago. Tax rate for the quarter 23.8%. PAT is at 19.1 crore, a growth of 96.2% quarter on quarter and 127.5% year on year. Share of loss from Astrovision, our associate company, is 9 lakhs. Cash balance at the end of Q1 342 crores. Return on capital employed is 36.4%. On the outlook for Q2 margins, we expect to achieve a triple-digit year-on-year growth in PAT. Profit may be similar level of Q1 or slightly better than current quarter. I would like to end this customary safe harbor statement. Certain statements during this call could be forward-looking on our business, which involves a number of risks and uncertainties that could cause the actual results to differ materially from such forward-looking statements. We do not undertake to update any such forward-looking statements that may be made from time to time by or on behalf of the company unless it is required by law. Thank you. Hand over to Murali.
Yeah, thank you, Sushant. Yeah, so we can take questions now.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Abhinav M from Aequitas Investments. Please go ahead.
Yeah. Hi. Firstly, congratulations for a great result. My first question was regarding the revenue recognition mechanism. How do we recognize revenue, whether it is over the period or by the end of the plan? And second was, how much is the difference between the billing growth and the revenue growth?
Okay, Abhinav, thanks so much. So revenue recognized based on the subscription period. So we have the membership ranging from 3 months to 1 year also. So for the duration of membership period, the revenue getting recognized. So that's the way it is done. If you look at the quarter 1, the billing was 136 crore overall, and matchmaking was 135.3 crore, where the revenue recognition was 130.5. There's almost a 5 crore difference. So because of the last year also there's a longer term package, 1 year package was introduced. So sometimes the revenue gap on account of the increase in the billing and on account of different packages. So let's get recognized over a period of time. So it's some quarter maybe 98% or 97%, it depends.
Okay, so do you expect it to streamline going forward, the revenue and billing gap?
The thing is about it's a billing growth continues because today, see, if you look at the year before, our package are only a 3 months package by and large and some 6 months package. So last year they also introduced a 1 year package. So there'll be some difference. If the revenue, the billing continues growth, there'll be some difference of year and 8 crore. So it depends on the quarters. Suppose the billing growth, sometimes the catch-up may happen also. There's a billing growth Q2 and Q3. There'll be some bit of slight slowdown can happen in terms of compared to the previous quarter, but revenue can be better also. So it depends. So net, it's last year was the first year introduced. So this year some catch-up is happening. Maybe between 97 to 99 depends. Depends on the quarters.
Okay. Thank you.
Hello. The next question is, since we have a cash on our balance sheet, what is the use which we are anticipating? Are we planning any acquisition or something?
Definitely, we continue to evaluate opportunities to reward our shareholders, also to grow the business. So we look at opportunity to acquire companies, opportunity to invest, and opportunity reward companies also. That continue to happen. So.
Got it. And then new ventures where there's a lot of cash burn continuing, and you discontinued also a couple of operations. What is the newer outlook on the newer venture business, and would we see any goodwill impairment or something on those lines?
In terms of the newer opportunity, definitely we see the opportunity to grow the wedding services, other initiatives. We definitely see the momentum happening probably in the coming quarters. So we are definitely upbeat about it. We changed the model which we communicated some time back. We moved from the subscription business model to a commission-led model. We believe that's a way forward on the wedding services. We see some traction. We are working on things. And so we are quite optimistic about the growth opportunity in the wedding services space and also other initiatives. So we'll see that happening in the coming quarters, which we are confident of it. And in terms of the goodwill, and we did take some impairment in quarter 4.
Yes.
So it depends, on how the business performs and all that. So we continue to evaluate and take decisions at the appropriate stage and all that. But in terms of net, yes, we definitely are upbeat about opportunity in the non-matchmaking revenue side, so which we hope to show the growth in the coming quarters.
Could you help me with the split of how much will be Bharat Matrimony out of the total matchmaking services?
So for the competitive reasons, we prefer not to give the breakup. So we are talking in the consolidated basis. Yeah.
Okay. And so could you just help me with the regional breakup, revenue split, like which part of India would be predominant? I think it would be South, right? If you could just give me a broad breakup.
Sorry, I think your voice is little sort of, I think maybe I'm on a speaker or something, but not clearly audible. Yeah, better, yeah.
Yeah. So my question was in terms of geographical split. I understand we are more heavily dominant in the South, but could you help me with a good mix of geography?
Again, for competitive reasons, while you are right that, some other market we are a very strong player, but again, for competitive reasons, we prefer not to share the geography breakup and all.
Okay, got it. And any particular reason why legal fees are so high?
What was the question, sorry?
Legal fees.
Sorry, again, not so clear. Sorry. Yeah.
Legal fees.
Legal fees, okay. Why the legal fees in order? Sushant, want to explain that?
See, we are now registering all the trademark. We have a lot of trademarks that we are registering the trademark so that other people should not misuse our trademark. That all the registration expenses, all that we are now doing for all our trademarks.
Got it. Any ASP increase you are taking in the plans across any of your platforms, ticket size?
No, I think we deploy various pricing strategy, nothing in particular. Yeah.
So, what is the currently, since the last year your strategy was to move from shorter plans to longer plans, so are we discontinuing a shorter plan, or how are things like, and basically, can you explain that? And basically, if all the contracts are moved to 1 year contract, when will the billing catch up with the revenue?
It's again, it's a user choice which package the user want to opt for. So that's a choice of users. While there's a benefit of people to go for 1 year package, again, it's individual choice. Some people prefer to get married in a shorter period of time. Again, it's one more package. It's not that today the 1 year package is it's a big contribution for us. However, we introduce this package to ensure that there's some kind of continuity for the users who are serious about matchmaking to have continuity in the service without need to worry about the subscription on every 3 months basis. Again, it's the individual's preference and choice. It's not the big part of our business. It's for certain percent customer opt for it. However, we provide this option to the customer so that people can have the continuity. So in terms of it's individual choice. I wouldn't say that anything in particular only for set of customer, nothing like that. So again, nothing like incentivizing or disincentivizing. It's a more like individual choice of which package somebody wants to go for. Obviously, 1 year package is not the multiple of 3 months package. Obviously, there's the price where there's benefit of going for 1 year package.
Okay. Got it. Thank you so much. I'll get back into you for further questions.
Sure.
Thank you. The next question is from the line of Vasudevan from Finvest. Please go ahead.
Hello, gentlemen. Good evening.
Good evening, Mr. Vasudevan. Yes.
The thing is, excellent performance, 100% you have given a increase. Is it because of the lower base than the lower base last year? Whether it is sustainable in future also, because for the last few quarters, your revenue, this one has been very flat. Because of the lower base, it is 100% jump short. But is it sustainable? This is my one question. And the second question is, one Bharat A coach investment you have made last year, I understand. What is the financial impact you got from that? Please be categorical whether it is beneficial, yes or no. If it is yes, how much? And if it is no, why?
So in terms of whether the profit, triple-digit profit this year, this year definitely, because last year it only introduced a 1 year package, some of revenue got deferred, and the combination, not only that, again the continuous growth momentum, as I said in my opening speech, we expect a double-digit billing growth, still revenue growth. It's a combination of a continued growth momentum plus because of the deferred revenue. So both are happening at the same time. So definitely this year we see that triple-digit growth happening in the quarters. So that we are talking about even the Sushant Swain mentioned the Q2 profit may be at a similar level or even slightly better than the Q1 level. So we have the double-digit billing growth, double-digit revenue growth, profit at a similar level or slightly better also. That means we are talking about sort of triple-digit profit growth for Q2. So we expect for this year the number sort of again we're talking about the current quarter, which is pretty much there. So that's on the matchmaking. When it comes to Bharat A Coach, it's more of the investment we made into one of the startup. We invested around 4 crore. Okay, it's a long-term investment. So it's an investment in one of the startups. It's a more like a lot happening on AA side. The company doing AA astrology. So it's an investment opportunity for us because we see that AA has been evolving, astrology has been a domain has been picking up. So we saw an opportunity, we invested in that company and all that. So you want
one more question, gentlemen. I think I'm talking to Vice President Shashant, I understand. Is it?
Yeah.
Our managing director.
Yeah, he's a Murugavel.
Our managing director.
Sushant is here. Yeah, he's a Murugavel and this. Yeah.
Okay. Last time I think there was one gentleman, CFO is not in the conference call today.
Yeah, he is not in the conference call today. Yeah.
Is he not feeling well?
No, actually he's on vacation. Actually, incident anyway, he's kind of moving out as well. But again, he's on vacation, so he has a few days of working day left. But he's on vacation now. Actually.
Okay, gentlemen. Thank you. Thank you for your time. Thank you for your time.
Thank you. The next question is from the line of Srinivas from Value Capital. Please go ahead.
Thank you. I have a few questions. You said this year you have introduced an AI. What are the AI use cases which you are implementing in your business to stay ahead? This is question one.
Yeah.
Second, can I continue the question or one by one?
No, you can continue the question so I can respond it to that.
Yeah, you please do. Second question is, what is the plan of the company to increase the top line? This quarter there is an increase in the top line, like resulted in the net profit. So I want to know just on the plan of your company. This is second. And third point is, the investor presentations in the website is all research and data are all showing as on 2016. Why not provided updated data using 2026 or current one? These three questions.
Thank you, Mr. Vasudevan. So let me go one at a time. Regarding AI, AI used in lot of automations. What being done by people, we are trying to do it through AI. The things like we earlier used to have people to do the the profile validations and the photo validations. We used to employ people because the one thing the matrimony want to be a company where it's known for trust and credibility. Everything is validated before gets to the platform. Today, obviously, these kind of things can be done through AI. So that's one area, automation thing like that. And the customer experience, we have a AI chatbot instead of today humans answering questions. It can be done by AI chatbot. There's some other work. Obviously, a lot is happening. We're also using AI on the product side here to ensure that the customer has a good experience. So AI is on multiple areas in the organizations. In terms of the plans to grow the business, again, we already mentioned that we expect double-digit billing growth and revenue growth. The growth is a combination of multiple. One is that continue to work on the profile acquisition, conversion strategies, and so these are things we continue to work on, and the product improvement. So the combination, all the things continue to happen. It's not that. So again, matchmaking is about the profiles and conversions and selling the right package. So this continue to work on these strategies. We launched a new offering. We launched love.com. We also went regional on love.com. We launched Malayali love.com because Malayalam is one market where normally the uptake is good. So we are also going regional on love.com. So the expansion, there are the business-related expansion, marketing. We also continue to invest big in the marketing. A lot of conversion strategy also being worked out. So combination all these things are helping us to grow the business. In terms of investor presentation, yeah, thank you for this valuable input. We definitely look at it and get this addressed. Yeah. Okay. Yeah. You can move on to the next question, please. Hello. Hello.
Thank you.
Yeah.
The next question is from the line of Prenimal Kota, an individual investor. Go ahead.
Yeah. Yeah, Janakram. Congratulations after long time double-digit growth. Hello.
Yeah. Thank you, sir. Thank you, sir. Please.
Yeah. Entire year, net profit is the same, what we given the same way. And another one, last Concall I requested, any employee or promoter buying and selling, they have to inform exchange within 3-4 days what price they bought it or sell it. That is a few questions from my end.
See, so sorry, the first question was not so clear, and the second question. Could you please repeat, sir?
Yeah. So what you given current quarter net profit, can we expect entire full year say in line with that net profit?
Yeah, no, we are only talking about Q2 because we don't want to talk about the entire year.
Okay.
But again, you based on the last year, the deferred revenue, Q1 there's a growth. Q2 we're expecting both billing and revenue and double-digit growth. So we expect the momentum to continue. I don't want to get into a specific quarter beyond the Q2, but our essentially called Q2, the double-digit billing and revenue, that's what we foresee. Plus profit you already mentioned is better than possibly even the Q1 slightly or maybe similar levels. Yeah. So again, the last year there's the growth is continuing. We're running efficient operations. So all the things contributed to the increase in PAT as well. Again, we are also investing in the growth as well. So that's continuing going to happen. So that's the thing in terms of the promoter buying back and all the thing. Our company secretary will do the needful. So thank you so much for that.
Okay. Thank you.
Thank you. The next question is from the line of Mani, an individual investor. Please go ahead.
Hello.
Yes, sir.
Yeah, hi. Hi, congrats for the good set of results. I wanted you to specifically speak about love.com and the efforts that you have taken in terms of some kind of initial feedback in terms of how it is shaping up, because we see IEL as part of Jeevan Saathi's disclosure is shaping up pretty well. So wanted to understand so that we are not, since it is liquidity-based platform and we need the first mover, I just wanted to know how we are progressing on that.
Thanks so much for asking this question. So, see, there is an opportunity, because India being a large market, obviously matrimony is a large market. Again, there are opportunities in the serious matchmaking as well. That's the reason we got to love.com. Again, compared to IL, you are talking about in specific, it's probably almost 2 decades old, and around 40 crore revenue last year. And so we definitely see that there's an opportunity. That's the reason we bought the domain name love.com. We also realized that, the strength of matrimony has been in a regional, and again, IL again is not a single brand. There are multiple brands as well. So we also think that going regional on love.com may be the good strategy. We just rolled out Malayali Love. So we intend to go regional on love.com as well. Again, again we are talking about somebody branding at almost 2 decades. Which is just launched less than just recently. So we definitely going to invest. We're going to improve on our product offering and also be one of the best players in this segment as a serious matchmaking space. So we have the product price is good. We are 100% verified, and we have some USPs. It's about marketing and getting more profile, because all this matchmaking or matrimony profile acquisition is important. We're going to invest. While we launch Malayali Love, we may launch other regions as well. So we may invest some money behind this love.com and grow the business. Yes, that we definitely, it's one of the things we want to invest and grow.
Okay. Thank you, sir. That's all I have.
Thank you. A reminder to all the participants, you may press star and have to ask a question. The next question is from the line of Pranay Shah from Karen Capital. Please go ahead.
Hi, thank you for taking my questions. So I have 2 questions. Firstly, we have seen our ATV price on the matchmaking line by 7% Q1Q. So just wanted to know, have we taken this bundling steps or discounting, which has led to this decline in the ATV, since we have moved to the new model, which is basically an ATV accretive rather than a decline. So what is the reason for such a decline?
No, sorry, just kind of, again, apologies. It's not so clear. Would you please repeat your question again?
Yeah, sir. My question is basically on the ATV price, which is for the quarter decline by 10% Q1Q.
Yeah.
Yeah. So since we transitioned into a new model, so I think, what is the reason for such a decline in ATV?
Okay. So ATV, again, no, we should not read too much into ATV. So the pricing is, one of the, the levers, whether it's not that there are 2 things. There are different packages and different price points. So I think the objective is to grow the business. So again, offering the right package to the right customer. So some customer offers the lower price, or some customer higher price, discounts. It's all being employed based on the data analytics and all that. So it's not something, the ATV continue going to increase. It's a combination of various strategies, segmentation, pricing, and all that. So in my view, you should not read too much into the ATV. It's a more of, you have to look into both sides. Again, you're talking about introduction of 1-year package. Again, it's introduced last year only for it's not that, majority of people go for one. It's a small percent of people opt for it. So that way, so we employ various strategies to drive the growth. So price is one of the levers. Again, price some quarter move up, some quarter reduce. Depends on what package, or again, uptake in some other package or ARM packages. The multiple factors come into force and all this. So I wouldn't read too much into ATV, because they're not operating at a steady state. So it's a multiple customer segment, and also more importantly, you have a multiple product. We have the Jodi, which is like kind of a very low cost price product. Now we also launched love.com at very low cost product. Yes. So it's again combination of multiple things. So my suggestion is so that's one of the information, but we should not give too much into that one.
So second question is on the revenue recognition. Basically, sir, if I look at deferred revenue and collection, so can you help me understand that what percentage of deferred revenue will be booked in the current quarter, and what percentage of the billing is booked in the revenue?
No, the thing is about what percent revenue gets booked in the current quarter. So, see, it's again, we say that you can pretty much around very 97 to 99% happens, depends on the quarter. So sometime, the billing slows down, the revenue may move up and out. If you look at how much of exact revenue get captured and all those things, so I don't know the number on top of things, but it's more like you can assume on a trend basis, you can assume between probably 96 to 99 also you can assume now.
Okay, understood. And sir, third question is on marriage services and others. We've seen that there's a loss being narrowed down in the current quarter. So should we read more into it? Like, how should we look at the trajectory going forward, and what are the steps which are taken which has led to this narrowing of losses in the current quarter?
So it's more than the losses. I would probably look into the growth. We definitely see that this is the momentum, and we change the model, and we also some new initiative getting worked out. We believe that the growth will get better and in the coming quarter. And in terms of and momentum, like I said, as you progress. Last quarter, we've taken some impairment as well. That's the reason the losses were slightly higher. Other than that, yeah, it's around less than 4 crore per quarter. That's what I think. Yeah. So yeah, last year. Yeah. Okay,
that's the one of. So apart from the trajectory has been maintained, it is not improved. That's what you mean to say, right?
Yeah. Correct. Yeah.
Okay. And sir, any update on ManyJobs, how it is progressing, and what is the timeline we'll be seeing to roll out on national level like before? What are the key metrics we'll be tracking before rolling out?
So we have a good number of companies are using it. Again, since it's the very early days, it's a combination of the paid model and some customer trial also given, and we have more than 1.5 million job seekers. So it may take some time till you achieve a certain run rate or close to a break even. You may not expand other markets, so you want to stay limited to stay focused only in Tamil Nadu. So at this point in time, maybe next year, maybe coming next year also, probably may focus only in Tamil Nadu. Probably sometime next year we may decide when to want to go national now.
Okay. All right, sir. Thank you. That's what my question is.
Thanks.
Thank you. A reminder to all the participants, you may press star and one to ask questions. Next question is from the line of Ankur Jain from Prayas Capital. Please go ahead.
Yeah, hi, good evening. Thanks for taking my question. I have two questions.
Yes, Mr. Ankur.
Yeah, continuing the response about the wedding services business, it was not very clear to me. Could you shed some more light with the change in the business model that we have taken in? What is the time period that you look for the business of marriage services to break even and then become profitable? That is question one. And the second question is about advertisement expenses. Have you seen any reduction in the overall competitive intensity? And as we go forward, do you see these ad expenses to moderate from the current levels? Thank you.
The business model of wedding services, we moved from while operate some extent subscription, but what we want to focus on the commission-based model. So that was what currently being piloted. We believe that's sort of thing we want to focus on. And so in terms of when do you think it can achieve a profitable order, it's more of you want to, we believe there's an opportunity. You want to grow the wedding services and take it to a probably 100 crore run rate. Then we can at that level it can contribute into the profit also. So focus, because the wedding there is a large opportunity. So as far as it's not at achieving a break even, it's a more of achieving the growth and reaching that the run rate. It's very important for us, and which we believe we can do it. That's a point number one. And when do you think again? We're just trying this model. We believe it's the right way to look into that opportunity. Probably sometime maybe 1 year down the line, probably have a better clarity on this one. And while we believe that we are in the right, I would say that we think that the approach is right, and again, probably have some clarity in the coming quarters. In terms of advertisement, while some bit are softening, but again, we are also want to invest behind our newer opportunities. So invest behind so some of the existing product as well. So while there's some bit of softening, we don't expect to reduce on marketing. Probably may even invest slightly more on marketing without while the profit will be there, the growth will be there. So even maybe required, you may even slightly step up on marketing as well to drive the growth. So yeah, we don't see any reduction in the marketing. So while there is some market, there are competitive intensity there are some market is softened, but net it's not fully slowed. It's a slowdown across India. So, but having said that, we also want to invest in some of the newer opportunities. So we may even slightly step up marketing as well.
Okay, thank you.
Thank you. Reminder to all the participants, you press star and want to ask questions. Participants can press star and want to ask questions.
If there are no further questions, yeah, we can end the conference.
Okay, sir. As there are no further questions from the participants, I now hand the conference over to the management for closing comments. Over to you, sir.
Thank you, shareholders and investors, and thank you for your patience. So last year, we did take some steps for the long-term interest of our organization, and thank you for your patience. So as you committed, the profit started showing up. We expect the momentum to continue. Look forward to your continuous support. Thank you so much. Thank you.
Thank you. On behalf of ICICI Securities, that concludes this conference. Thank you for joining us, and you may now disconnect your line. Thank you.